Okay, we are live.
Hello, everybody. Welcome to another show. It seems like a while for some reason. We've been doing lots of live broadcasts with the Retirement Plan B customers and clients, and those have been going very well. And last week we went live on Robert Kiyosaki's Rich Dad Radio, which was a really cool experience for me, as that was a book I read a long time ago. So welcome, everybody. Today, we're going to be discussing a mishmash of different subjects that have happened over the last few weeks and requests we had from people. One of them is, and we're going to tie them all together as well. One of them is lots of Tether stories coming out, lots of XRP and Ripple speculation, and also different stories with Craig Wright and the Tulip Trust. So the question that I have for all of you is, what do all three of those have in common? If you're watching the live stream, put it in the live chat right now, or if you're watching the recording, put it in the comment section, and we'll be going through what all three of those have in common, and we'll be going through just giving you a quick update. Also, remember to use the live chat to ask questions. Azad is not available at the moment. Aman's stepping in, so he'll be moderating and checking out some of your questions, because this is one of the AMA sessions. And so feel free to start asking those now, and we'll start picking them out. And always remember, it really helps if you like, if you subscribe. When you hit subscribe, hit that bell symbol, hit all, and YouTube will start giving you notifications. Yeah, we had to have a bit of a break because YouTube put us on lockdown as well. So we had to resolve that with YouTube, and hopefully we can keep delivering you content, and the God of YouTube will allow us to continue doing that. So let's jump straight in. So it's been a really interesting few weeks, few months in Bitcoin. We had obviously the almighty price rally, and now we're starting to reach some normality, and Bitcoin is starting to reach its new normal price. So what has been happening? Well, the first thing that I haven't had a chance to give an update on is the XRP story. For full disclosure, I don't own any XRP tokens, but I am a shareholder in the company, Ripple Labs, and I've covered why in different sections and different videos. But people are asking me a lot about the XRP situation, how it affects Bitcoin, and what it is. And so I wanted to just give a bit of background on the whole situation. Obviously, as CEO of Bank to the Future, the world's first securities business, we've had a lot of experience with securities in the Bitcoin and crypto space. So this is a topic we understand and know very well. It's a tricky one because XRP was originally created by a developer called Jeb McCaleb, and Jeb McCaleb was the founder of the infamous exchange Mt. Gox. That he ended up selling to Mark Capellas, and there was 80,000 Bitcoin missing from that, and that led to Mt. Gox being like a fractional bank in the early days of Bitcoin, and because almost 70% of all Bitcoin trading was happening at the infamous Mt. Gox, when those 80,000 Bitcoin went up significantly in value, Mark Capellas ended up operating a Ponzi scheme. A few hacks later, a bit of incompetency, and we had the largest risk event where people started to really learn the danger of storing Bitcoin at exchanges. But it all began with the person that created the XRP cryptocurrency, and then over time, it started to develop this technology. Actually, the original version of the technology was trying to support a settlement layer between banks and disrupt SWIFT. Then the cryptocurrency came a little bit later. So the interesting thing is that the company maintained approximately 60% of the supply of XRP. When we sold a token at Bank to the Future, we had to sell it in compliance with securities laws, because you don't want the token to be an actual security, because then it can't trade on cryptocurrency exchanges. And if it can't trade on cryptocurrency exchanges, then you don't get to be involved with most of the community that's trading on these cryptocurrency exchanges. But when the company, didn't sell them in compliance with securities laws, it created this interesting dynamic, which is what the SEC is contending with right now. And that is, if the company owns the majority of the tokens, it's when they start selling them that it starts to cause some of the challenges. And Ripple quite aggressively started selling some of these tokens and drawing it down as revenue. But when companies sell tokens, what the common practice is now is that if you want the token to be true utility and true value and have utility and trade on currency exchange, then if you're ever selling it to people that are investing in it, then you sell a contract that gives people entitlement to those tokens, was the model that evolved. And then you can file that with the SEC and you can sell them in compliance with securities laws, but you can't sell them to anybody and then they can't buy them and then dump them on the exchanges and all sorts of stuff. So there's certain restrictions there. So the question is, XRP a security? Well, I think what is going to be really interesting is what happens with the case against the SEC. So obviously Ripple Labs, the company, are disputing that it's a security because they want to use it as a settlement layer between this technology. They got technology that's trying to create a settlement between banks and improve the clunky, disgusting world of international payments. And they have technology that doesn't require XRP, and then some technology that does require XRP. But I think when they started to go in murky grounds is when they started to sell these tokens as if they were cryptocurrencies that were held by inventory. And now we get this massive speculation, because the challenging part of that is the cryptocurrency exchanges, the vast majority of them, in fact, all of them, do not have licenses in order to sell securities. At Bank to the Future, we've been working for a long time on being able to sell securities, and it can't be open to everybody. It's got restrictions and it's got all sorts of challenges in complying with global securities laws. And so the exchanges then started to take their risk profile of, well, if the SEC is trying to claim that XRP is a security, and therefore we need to delist XRP, and as exchanges started to delist it because they don't have the license, it can, people are saying, well, it can rebuild itself if it is classified as a security. But as we know, if you look at the security token market right now, it is not open to everybody. It's highly restricted. Transfers are, very challenging. And you have to comply with securities laws, which is a nascent industry, but a very early industry and a lot smaller than the cryptocurrency market. So if that is the case, then we get all sorts of interesting scenarios. And so that's why the XRP cryptocurrency went from being the third largest by market cap, and it's now been sliding down under Tether and under Polkadot, which is a rising star in, I guess, the alternative blockchains trying to compete with Ethereum. So, the security case is a very important case. And then people start to think, well, if it is a security in the US, then it may not be a security outside US, which could be correct, because the definition of a security in the US is what's known and defined in case law by the Howie Test. And the Howie Test says that if you are selling with the expectation, where people have a reasonable expectation of returns in a common enterprise, the giving of money with the expectation of returns, then they deem it to be a security. And so most people would agree that they are purchasing XRP not to use, but to actually invest in. And then you create these interesting dynamics. But then the challenge is if you say, well, it's not a security in the US, or it is a security in the US, but it's not a security outside the US, then you create the need for everyone to, so if you said, well, let's restrict US, but how are cryptocurrency exchanges going to do that? And how are people going to do that on DEXs? Have to introduce KYC, and this is why security tokens have to know who the customer is, and they bake it into the protocol, which very much changes the dynamics of what it is. So it's a very important case for the company, but the The reason I'm a shareholder in the company is because it's not dependent upon XRP, the cryptocurrency. And so therefore, that's why I don't own the tokens. That's just me personally. You could do the same, whatever your financial, I can't give financial advice. So whatever you do is up to you. But that is one of the interesting stories. But what will that be used and how does it relate to Bitcoin? Well, you're going to get lots of stories about how people are saying, well, if XRP is a security, then Bitcoin's a security. But that's definitely not the case. And it shows the importance of what makes Bitcoin so unique over other cryptocurrencies is that they're not connected with a party. And that party was not selling those tokens. And it was created in a unique time called the Immaculate Conception when nobody actually cared. There was no price. And so therefore it avoided many of these situations that new tokens that get launched are doing. The other thing is the implications it has in the DeFi, decentralized finance space. A lot of tokens have been launched in the decentralized finance space as governance tokens, but most people are speculating on those, giving money with the expectation of returns in something that might be connected with a common enterprise. And so this has implications for the decentralized finance tokens. And I do think that the SEC will use this as their major case. And then they will start to probably enforce crackdowns on some of these decentralized finance tokens. So when they're using these tokens and issuing these tokens, it can cause challenging situations, which is why in the end, it comes down to an integration with the security token concept and baking that into the chain, which is where probably a lot of this ends up going and driving more innovation in the truly decentralized space, but without necessarily the tokens. So we'll see where that one goes. Just going to take a quick water break while we move on to the next one, but please do ask your questions. If you're enjoying this, please do like, please do share so we can get more views onto the channel. Quick break. Okay, next topic is the whole Tether stuff. So again, full disclosures, I use Tether regularly. I think it's incredibly useful. And it makes up part of how I manage crypto finance. So I think Tether is incredibly useful. And the management team behind the Tether company is also the Bitfinex team. And I am a shareholder in Bitfinex. And the company that I co-founded makes a market in Bitfinex SPV shares. So full disclosures. I've given commentary on the situation with Tether, but it seems to have re-emerged again, and it's kind of the topic that just keeps coming. And many people are speculating on the fact that this recent bull run is as a result of tethers being created, and those tethers being created are then used to pump the price of Bitcoin. And people are using that to talk about how the Bitcoin market is completely manipulated. On the topic of manipulation, the Bitcoin market is 100% manipulated short-term, but not long-term. And that is because every single financial market is manipulated short-term because it consists of a bunch of buyers and sellers and players that try and drive speculators into selling and buying. And I know that because I used to work on the traditional financial markets as a market maker on the alternative investment markets for the London Stock Exchange stocks. And my job as a market maker was to create trends that drive liquidity, buy, sell, and try and create that spread in the middle. And so there are a lot, all markets are manipulated, and Bitcoin is no different. Bitcoin is particularly manipulated in the short term because it's trying to drive you as traders to make certain behaviors in an environment where there is a shortage of Bitcoin, and they want to scoop up the fearful using such scenarios and manipulation. So Tether, now as a shareholder in Bitfinex, I don't have any particular inside information, and all I'm talking about is what is publicly available. But the Bitfinex Tether situation, for those that don't know the history, is a banking problem. It's always been a banking problem. Bitfinex was an exchange, is an exchange, and that was built on the crypto ideology to give people more choices when they're trading, and they became one of the most liquid exchanges for Bitcoin. But they created the whole stable coin concept. It was actually a couple of people. So Brock Pierce was working on a token, and that ended up merging with another project that was being created that later became Tether. And Tether is a stable coin that allows people to transfer between exchanges. Now, it got really popular for a number of reasons. Firstly, it gave people the ability to transfer between exchanges, which created more efficient pricing in the exchanges because people were able to arbitrage easily. Arbitrage is the concept of if the price is different on one exchange, you could buy on one exchange, sell on another, and make a risk-free profit, providing that you can get between the exchanges and hedge those risks. And Tether became a mechanism for making it really easy to get funds between the exchanges. That started to become very popular and helped to normalize the price of Bitcoin. As it became more popular, it was for a long time, no one was using it. I remember Bitfinex and the Tether team, they were trying to get the different exchanges to adopt it. No one was interested. No one thought it was useful. But then Kraken started to use Tether and make a market in Tether. And it created this interesting two-way market. And then suddenly the crypto-to-crypto exchanges, the largest one at the time was Poloniex and Bittrex, which didn't have bank accounts for their clients. And suddenly this new exchange got launched called Binance. They did a token sale, they funded it, and they launched so quickly they didn't have any time to get banking. And so they did it in the crypto-to-crypto market. And as they became more and more popular, more and more people started to onboard through the exchanges like Kraken and Bitfinex that had bank accounts. And then they could buy some Tether and they could get it into Binance. And suddenly Binance just grew and grew and grew. And they grew so fast because they never had to deal with the banking issues that most of the other exchanges have to deal with. Now, suddenly, when you've got $5 million and it goes up to 10 million and 100 million and a billion, then suddenly, banks start to get a little bit fearful. And so as more and more banks didn't want to work with the cryptocurrency industry, one by one, each bank came along and said, right, Bitfinex was using a Taiwanese bank at the time. And then suddenly comes along Wells Fargo, which is the clearing bank. So the difference between intermediary banks and clearing banks is that clearing banks, they clear directly into the central bank. They have accounts with the central banks. But intermediary banks are often used so that you can have other banks that have to have bank accounts with clearing banks. So you have a central bank, you have a clearing bank, and then you have another bank that sits on top. And these banks need to have accounts with clearing banks. And it's a monopoly and an oligopoly to try and get accounts with the central bank and clear directly in. They all have to go through the clearing banks. And so when the clearing bank says to one of their partner banks, we don't want you servicing the crypto and Bitcoin markets, please get them to move, then you start to have banking challenges. So it's not so easy trying to move $1 billion of value around, and you start to have these different banks, and then you have these different relationships. But then the 2017 bull market came along, and the value that was back behind Tether became bigger and bigger and bigger. Eventually, it hit a scenario where they had to, because the crypto market, every time people deposit dollars, then at a certain stage, new tethers get issued. So when you see the tether supply increasing, it always coincides with the bull market. Now, what people say is they say, no, it's the tether being created that drives the price of Bitcoin. Whereas what's happening is more dollars are being deposited to the bank, which then creates more tether, because more dollars being created creates more tether as a stable coin come the onboarding process. And then people use those to purchase Bitcoin and trade them around in these different exchanges. And once you enter crypto, you tend not to leave. And therefore, the market cap tends to go up unless there was fearful events that drive more fear and people trying to exit the stablecoin markets. So it started to, this new use case came along, which is where people started, you went into the 2017 bull market, more and more dollars were being deposited. The crypto to crypto exchanges were growing at such a fast rate, and everyone ended up using Tether as their bank account while they try to figure out a bank that they can work with. And so you end up with these crazy scenarios that drive obviously more adoption in crypto and nobody exiting the crypto markets because they tend to stay in. Then we entered into the bubble phase of 2017, where Bitcoin went up really fast to 20,000, corrected back down to 3,000. And the second use case of stablecoins came along, which is people that didn't want to exit crypto. They wanted to stay in crypto, but they wanted to protect themselves from the downside. And therefore, the stablecoin and Tether became more and more popular. And we entered into the bull market. During the bull market, lots and lots of innovation was happening. And then suddenly the whole Ethereum side started to come along, and we started to get DeFi innovation. And DeFi innovation, decentralized finance, was built upon having stable coins as an integral part of that. And so the popularity, so you kind of had these phases, which was phase one, arbitrage. Phase two, protection against downside and bubbles. And phase three, you started to enter DeFi innovation, and the market cap of these stable coins goes up and up and up as more people on board in fiat into the crypto markets. So all through those cycles, and then what happened, the story in the middle that I forgot to say, is that as people wanted to deposit and withdraw really fast from these exchanges, then Bitfinex had to work with, so it's easy to get a bank, well, not so easy, but one thing is having a bank where you can store it, but one where you can transact in and out very fast on autopilot. They ended up having to use a payment service provider called Crypto Capital, and Crypto Capital ended up being fraudulent. Apparently, they were using some of those funds, and so the government cracked down, ended up seizing a bunch of those funds, not from Tether, but from Crypto Capital, which created a hole. And when that hole came along, they used a way of actually using the reserves of the company to temporarily lend the money while they tried to figure out what happened to those funds. And then now, allegedly, according to all the public records, those funds have all been paid back, and it's backed by this, and they had some changes in the terms and conditions. But as I said, it was all about a banking challenge, and that's all because banks are, nervous about the crypto markets. And then new people came along and created stable coins later as banks started to realize where this industry was going, and they started to work with it. But you will always see fear, uncertainty, and doubt. They eventually got a stable banking partner, and now you always have these stories. And these stories will always be used to try and fear people into selling their Bitcoin, because even work through a few scenarios. Even if Tether completely blew up, what would happen? Well, it would create an amazing opportunity for people to buy Bitcoin discounted, because the news would dump the market, certainly. Short-term manipulation. There's a lot of people that want to accumulate Bitcoin. And then where does all that Tether go? Well, that Tether now is trying to buy Bitcoin. So eventually you'd probably have people realizing this. It creates this dumping opportunity. And those that are trying to accumulate use this as the perfect opportunity to use the fear, uncertainty, and doubt to take your Bitcoins, because you're using this story of thinking that the crypto market's over. The market readjusts, just like we saw during, for example, the China exchange ban. It crashes from 5,000 to 3,000. People realize that the news is not so bad, and therefore it reflects, and then those people dumped out. And the short-term market manipulators end up being able to drive the markets up, and then the long-term fundamentals prevail, which is the long-term that Bitcoin, it gives you the ability to own your own money, spend your own money, and has fixed supply. So the Tether story will continue, and it will continue to have people speculate on it, and it will continue to be a reason for people to tell you, don't buy Bitcoin, and create lots of uncertainty events and stories for that. And then finally, the final story that I wanted to cover in this one is that you're certainly going to get more stories with the person that claims that he is Satoshi Nakamoto, Craig Wright, who's now saying that he's got hold through the Tulip Trust of the original Satoshi Nakamoto coins. Originally said that he was going to prove that he owned it, didn't do that, and now saying that he's got the coins and the Tulip Trust. And so these events are short-term events that scare the crap out of new people that haven't figured out that Bitcoin is a way of it is manipulated short-term, but the long-term fundamentals is that the utility each and every year to own your own money, spend your own money, and have fixed supply has consistently increased. And we've been in a 12-year bull market ever since inception, with corrections and manipulations in between. So what do all these three stories have in common? Well, all three stories, XRP, security, whether it's a security or not, Tether, whether it's backed or not, Craig Wright, whether he owns the Satoshi coins or not, they're all going to be sensationalized stories that short-term market manipulators will use in order to try and get you to sell your Bitcoin so they can scoop them up as we continue in my projection of the 12-year bull market that we've consistently been in, with short-term manipulated corrections and corrections based upon over-accelerating too fast. So that's the main topic. And now we move into the AMA section. So as always, if you've got questions, use the live chat, use the comment section below. We'll cover any topic that you want to go through, and Aman will be picking out some questions. Maybe we'll do some questions that might take a bit of a longer answer, and then maybe we'll do a bit of a rapid fire and get through as many questions as we had in the live chat. Just before we do that, always remember, the YouTube algorithms always work better if you hit that like button, if you've enjoyed this content, and you share the content out there and you leave some comments and engage. So we really appreciate that. We're about to hit 60,000 subscribers, which is awesome, because I remember when we first started these videos, I think it was about 6,000 subscribers for about 9 years. And then we started I decided as the pandemic got worse and worse to try and support many people in making better financial decisions based upon better education. And we've gone from 6,000 to 60,000. And we're not even full-time YouTubers. So really appreciate that. Thanks to all the subscribers. And Aman, what questions have we got?
Okay, so we've got almost 500 live viewers with us right now. And we've got some questions, and a couple of questions are around, are you concerned about the government banning Bitcoin, and especially after this bull run and the prices increasing so much? What do you think governments would react on this price move?
Yes. So am I concerned about governments banning Bitcoin? It's not something that concerns me. It is a risk of the market. So of course, can it happen? Yes, it can. And one of the videos we created was just around this. 2 videos if you want to dig deeper, and I'll answer the question now. One video on my YouTube channel was myself and Andreas Antonopoulos. We went through a video, and we called the video "Don't Buy Bitcoin," and went through the common reasons why people don't buy Bitcoin. And one of those is thinking that it will be banned by government. And I also created a shorter video called "Governments Ban Bitcoin," so you can check those out. The reason I don't concern myself too much is because think of the trends, what's happening right now. Well, the first thing is there is a movement towards central bank digital currencies in order to exercise more control. But also governments all around the world, they've destroyed their money supplies, whereby they're going to have to make ginormous changes in monetary policy in the coming years ahead. Discussed this extensively about how central bank digital currencies will be used in order to allow banks to go bust and ensure that you don't lose your money, but then take away all your privileges, all of your freedoms and all of your liberties in the process as you opt in to the central bank digital currency. But all that I see right now and all that I have seen over the last 12 years is where's the next money grab for governments? And the next money grab for governments is that they know that a lot of their citizens bought Bitcoin in a time when the tax situation of understanding how to tax cryptocurrency was very uncertain. And so that they know that there's lots and lots of their citizens around the world that have purchased Bitcoins and have become multi-millionaires, if not billionaires. And that is the next tax grab for them. So as we start to move to the market cap of $1 trillion and beyond, this looks like a very sexy sector for governments to try and get that. So what do? Well, they first try and do a regulatory crackdown on exchanges. And that's certainly a trend where they're making sure that they get as much data as they can. So rather than banning the exchanges, which is the mistake that China made, when they banned the exchanges and started to arrest some of the founders of the exchanges, what happened? Well, everybody continued to trade Bitcoin and want Bitcoin. The price went into a bull market after a short correction. And they all went and signed up on Korean and Japanese exchanges. And so Japan was focusing on Bitcoin regulations. And so because they had two major exchanges that were hacked, Mt. Gox that was hosted in Japan and Coincheck that was hosted in Japan, they learned the lessons of making sure that you regulate the exchanges and introduce additional protections, but also make sure you get all the data. And so when you onboard people, they can, if China lost all the data, they allowed mining to happen. What's mining? Well, mining is where you buy machines and Bitcoins get spit out. That's not something you can do KYC on, know your customer. But the exchanges, they've got all these regulations and everything the exchanges have to adhere to. So why, if you ban it, you lose all the data that governments want, which is knowing how people are onboarding and offboarding. And driving it to decentralization is the last thing that they want, but it will obviously drive decentralized innovation. But if you ban it, you drive a lot of decentralized innovation, and you end up losing all the data that you want in order to enforce your tax regime agenda. And then as more and more people get more and more wealthy, you lose all that tax to another country because they end up signing up to other exchanges, and you don't get the government money grab in the next asset, which seems to be moving beyond $1 trillion market cap and beyond. So all I see is governments wanting to ensure that the correct regulatory structures. And then recently, we had announcements from the European Central Bank that they're saying, oh, there's fishy activities that are happening in Bitcoin. Firstly, fishy activities are happening in fiat money, and Bitcoin is not a good way of doing fishy activities because you create a permanent immutable record of your transactions that then doesn't create plausible deniability if they can connect that identity to those transactions and those wallets if they ever seize them or get them in the future. So that's a really bad way of doing it. And so what did they say? They didn't say we need to, they said, we need to regulate Bitcoin, but what they mean is we need to regulate the financial institutions that onboard and off people into Bitcoin, which are already regulated. They can't regulate Bitcoin because there's no door to knock on. There's no person to knock on. It's not like XRP where there's a company you can knock on the door and say, hey, we think you're violating securities laws. We're going to send the letter and the judgment. They can't send that letter to Bitcoin because there is no door to knock on. Hence the reason why Bitcoin is our world's best shot at achieving digital sound money. So myself, I don't concern myself. Can it happen? Yes, it can happen. So if a country did it, well, America in the past, in order to recover from the financial crisis, made the hoarding of gold and gold ownership illegal. And how do they exercise that? Well, they did it and they said, basically everyone needs to hand it in. Not everyone handed it in, but they target the custodians. And so this is the importance of owning your own Bitcoin so that you can own the asset and that's less likely to be seized. And then other countries come along and say, hey, well, we're in a currency war with America. China's trying to create rails that function outside of US dollars. And so they start to think about what are the alternative rails. So they say, well, we're going to create a good structure for regulation of Bitcoin. We'll take all those jobs. we're recovering from a pandemic. We want a bunch of jobs. We want a growth sector. We want tax collection. And you create this game theory situation where they say, okay, let's build a position in Bitcoin. Let's get our central bank to buy Bitcoin. Let's use some of our country's electricity to mine Bitcoin. And then we'll make an announcement that Bitcoin's being used as a reserve currency in our country. That creates, the pump. And then you create a ginormous FOMO, government-wide FOMO, where the companies that ban it become the last ones to state that they are banning Bitcoin because they already made the announcement. And the countries that haven't banned it get all the opportunity, all the jobs, all the tax collection, all the data that they want. And so you have a game theoretical scenario. Then what happens? Well, countries like Bulgaria, they played this one out before in the past. They seized a big bunch of Bitcoins from some criminal organization, and they ended up owning Bitcoin that superseded the value of their national debt. And countries have this game theory. Do you think that there's not countries right now that want to own an asset that supersedes the value of their national debt in a game of currency wars where the monetary system is being renegotiated and there's power grabs and people are trying to, go for more nationalist protection in an environment where they've learned about the challenges of relying on other countries in global environments? So to me, I see that as a very low scenario. I think that it's highly likely that one country will do it, and then you enter into the game theory, and that creates opportunities to accumulate Bitcoin from the fearful, and then we have a fourth entity that joins with Craig Wright, XRP, Tether, and all the FUDs that's trying to get you to sell your Bitcoin so that short terms can market manipulate. And then we continue into the 12-year bull market that I'm betting we're in. Why? Because the demand for owning your own money, the demand for spending your own money, and the demand for fixed supply tends to go up. Supply and demand. Next one, Aman.
All right, thank you for that answer. Since you are answering and talking about the governments and what would happen if governments would ban crypto or Bitcoin, there are a couple of users who are asking any specific thoughts around US administration, the new Joe Biden government and Janet Yellen coming in, those comments, anything specific about that? And how do you think the new US administration could have an impact on the crypto space?
Yeah, the US politics becomes really interesting for Bitcoin as we see how this actually plays out. So Janet Yellen used to be, from the part of the Federal Reserve, and she's now in Treasury, which to me is a movement towards socialism and the trend towards America looking more and more like China, and China looking more and more like America, which is a trend. And then these countries converge on the socialism in the middle as the wealth inequality drives people to demanding governments to give them more things. They don't want more freedom, they want more free stuff. And so we see the trends that we're seeing right now, where everyone's demanding more stuff from governments, which drives us more to a socialist ideal. And that is best served under a blue government in terms of US politics. Now, what are the trends that we're seeing right now? Well, you've got the IMF that wants to come out and launch a global digital currency. You've got US that is going through a transition where the Chinese central bank has launched their own central bank digital currency, and the dollar is gradually being devalued until we enter, 8 years from now, they're forecasting that the GDP of China is going to be greater than the United States of America, or the divided states of America, we call them now. And so as those shifts and changes happen, you get radical monetary reform policies. And therefore, I think that we're driving towards the convergence of what they call now modern monetary theory that I covered in my book, Bank to the Future, Protect Your Future Before Governments Go Bust, which was the first published book in the world to include Bitcoin over a decade ago, that you can all get for free, by the way, if you're watching this. If you'd like a free digital copy of that book, head over to retirementplanb.com/book. Aman can share the link in the live chat and in the description. It's www.retirementplanb.com/book. And you can sign up and get a free copy of that. And so in terms of US politics at the moment, you've got this emergence between what this Federal Reserve being more and more involved in fiscal policy, and then the Treasury being more and more involved in monetary policy. And then when we have a monetary renegotiation, you can imagine we are moving towards modern monetary theory, which is bad news for banks, but you have a more controlled environment. I think that's a movement. Now that drives the utility and use case of Bitcoin as people start to question and drive for more money that they can own, money that they can spend, and money that is fixed in supply as these trends play out. We're getting a new leadership at the SEC. They are blockchain focused. They, I think, will be better than in terms of bullish for the industry than Jay Clayton, but we'll see how that actually plays out. I think the interesting one in US politics is Trump from here. So Trump went through the WikiLeaks scenario. WikiLeaks was blockaded from the financial system. Trump, due to his recent actions, has been blockaded from the financial system. Stripe accounts and contributions shut down, bank accounts shut down. Now, Trump used to have to support the dollar. That was his job when he was president. But when he's no longer president, he doesn't have to support the dollar. And somebody like Trump probably wants a lot of revenge. And so the way that Trump goes from here is he's probably entering into starting his own social networks, his own TV networks. And I think with the financial blockades, he's starting to realize the value of money that you can own, money that you can spend, and money that has a fixed supply. So I think this Biden and Trump case politics becomes really interesting. And at some stage, Bitcoin starts to enter the conversation, because when Trump was president, he had to obviously say, I hate Bitcoin, because his job was to promote the dollar, because the dollar is where America gets its ability to maintain its power, which is backed by its international military bases all around the world. And how do they spend those military bases? By owning the dollar. And the dollar is the currency you have to have when you buy gold, when you buy oil, when you have these petrodollars, and also central banks hold it. So we get these really interesting trends. And I think Bitcoin plays an essential role in these upcoming currency wars. And I think, it will drive more demand from individuals that want to buy Bitcoin by having a blue government in the US. And I think we've got more to come from the Trump side as well, as this impeachment and everything comes to be. So we got another 15 minutes. So I'm going to that's my long answers to a couple of questions. And now let's try and get some shorter answers to cover as many questions as we can in the last 15 minutes. What do you got for me, Aman?
Okay, let's give it a try. So if new central bank digital currencies will have no inflation, how can Bitcoin be the inflation hedge after CBDC is implemented by, say, the year 2025?
Yeah, so there's a couple of things here. There's inflation. I covered this in the book Bank to the Future, that people think there's going to be inflation, but technology and free stuff is driving down prices, because inflation doesn't factor in the fact that everything's becoming free and you can download free apps. What's happening is your cost of living is getting higher and your debt's going higher. So it feels like there's inflation, but technology is driving us more into deflation than inflation. So that's the inflation deflation thing. If central bank digital currency is not inflation, of course they'll be inflationary. Those printing presses are going to go. They're going to issue it in relation to banks going bust and allowing people to not lose deposits in an environment where they can't do bail-ins and they can't do bailouts without causing mass riots in the streets. So they will be inflationary. They will increase the prices. But the reason that we're not seeing inflation is, one, when you get excessive money printing during a depressive economy, it doesn't tend to show up as inflation. And two, you've got technology driving down the prices, but then you've got the debt trap. So in my book, Bank to the Future, the one you can get for free, I called it the debt trap of freedom. And I talked about these three forces coming together and converging on modern monetary theory in the end. Next question.
Okay. Central bank digital currencies versus stablecoins. Who wins?
So I think you will have both. And I think central bank digital currencies are just a government-backed stable coin, or it might be backed by basket of currencies in the case of global organizations like the IMF. And so you're going to have stable coins issued by companies, issued by decentralized applications, issued by governments, and you're going to be used in currency wars and global organizations like Bank of International Settlements, World Bank. And so to me, they're the exact same thing. And then eventually you get them integrated with artificial intelligence, where you have algorithmic monetary policy based upon complete surveillance of everything we do as you download the app that is the gateway drug into the central bank digital currency, where you sign away all your freedoms, liberties, and privacies. Next question.
All right, thank you. Not sure if you've heard about this term, but somebody's asking, have you heard about promise coins? What are promise coins and what is the future looking like for such coins? I'm hearing this term for the
Quick
first time.
answer? No,
No?
not heard of it.
Promise coins. Okay, we'll move on to the next question. Do you see DeFi, decentralized finance, being a rushed experiment, which ultimately will be built on top of Bitcoin?
Interesting question. So I think Ethereum has an incredible network effect, an incredible developer community that are coding up the decentralized financial solutions. And it's going to be very hard to disrupt that network effect. I've invested in several protocols and companies trying to do that with Bitcoin. For example, with Rootstock, RSK, and they launched the Rift token. I was a backer of that, and I think they're moving more into DeFi on Bitcoin, and I think we're going to see a lot of innovation there. But I think it's all going to be done via side chains and different innovations on top of it. It's going to be very, very hard for the Bitcoin community to catch up with the Ethereum community, which has created an incredibly buoyant. And as it starts to move to proof of stake, I think you're more likely to see the two actually converging into getting the best of both worlds. So Ethereum optimizing for decentralized finance and Bitcoin continuing to optimize as a store of value and you know, the collateral behind it. And I think you can already see that more Bitcoin has been locked up in Ethereum than it has in Lightning Network. And I think those trends continue. But I think the competition is really, really healthy. The fact that you can collateralize your Bitcoin and then you can use it on Ethereum, get the best of Ethereum in the decentralized financial, if you're a very advanced user. And also, I think that it's great to see the competition to drive more innovation on some of these side chains, different protocols, different networks built upon the side of Bitcoin. So I think we enter into a really, really healthy competitive environment, which just drives forward innovation in both areas. But I do think in terms of decentralized finance, Bitcoin is the underdog, Ethereum's the incumbent. It's going to be very hard to disrupt that network effect. I think they're going to work together nicely.
All right, thank you for that. Any speculation or thoughts about a traditional market correction in 2021 impacting the current crypto bull cycle?
Yeah, so this is 100% politics. And if you haven't watched my 4-part video series at retirementplanb.com, and I also uploaded them, if you go to retirementplanb.com/book, when you download the book, we also included the 4-part video series for those that missed it. This was one of the topics that we actually covered. And that is that you are betting on politics. So what governments have shown is that they no longer believe in free markets. They don't believe that the stock market should ever go down. They don't believe that because the entire industry is dependent upon the pensions, and the pensions are dependent upon the stock market. And so they don't want to let people's savings go down. But at the same time, that's driving wealth inequality because the Federal Reserve is pumping money into pushing up asset prices, which is designed in a zero interest rate environment to create a wealth effect, which makes the wealth, those that have assets get wealthier. and then it drives wealth inequality where the poor get poorer, and therefore they go deeper and deeper into debt, and you have this ginormous rich-poor divide, which creates huge challenges as the rich get richer and the poor get poorer. And so for that reason, governments have said, we don't care. We cannot let more affordable housing exist. We can't let real estate markets crash. We've got all these real estate investment trusts that have invested in it. Therefore, we're willing to pump and we're willing to give up on free markets. We're willing to give up on capitalism. And we believe in a completely centrally planned and centrally controlled market, which is exactly the end result that I forecasted in Bank to the Future, Protect Your Future Before Governments Go Bust, as you converge closer and closer towards 100% tax and communism. And so I think they will not let the markets crash. And then you enter into the China model, which is more and more government control, but taking advantage of free markets and capitalism and enter into a hybrid, which created the largest growth story for China that we've seen in the last few decades. So yeah, that's where I think it's going. Now, the question was, if the market crashes, what's the impact on Bitcoin? Well, we've got that experiment. I do think it's becoming somewhat of a, so, in times of fear, then people sell off all their assets and they drive themselves into cash. But people have started to see that Bitcoin, how it performs during these markets and during these times, and more people are getting educated. As there's more and more corporations entering, accumulating those Bitcoins, then you start to see different dynamics. But what is Bitcoin price dependent upon? I've said it time and time again, short-term manipulation of prices and long-term fundamentals. What are the fundamentals? Ability to own your own money, ability to spend your own money without censorship in the middle, and fixed supply that encourages savings and a collateralized based economy rather than a debt-based economy where your savings always deplete in value, so you're driven to speculation in stock markets. So you may get correlation in the instant short-term manipulations, but then the fundamentals decouple as we continue into that 12-year bull market is what I think we're seeing. Next question.
There's this question about your thoughts on the GameStop situation. I've read this in the news, not sure if...
GameStop?
Yes.
Yeah, not too familiar with that. I haven't read the story. Been too busy recently.
Yeah. I've just read it in the news today itself. It's, I think, some gaming platform or something in US and something related to trading. But no worries. We'll move on to the next situation. Next question, which is, will central bank digital currencies, which are anonymous and finite supply and censorship immune, outcompete those that aren't?
Not going to happen. What you're saying is you would like the government to reverse their agendas on anti-money laundering. You would like the government to stop caring about tax collection, and you would like the government to start reversing everything that they've cared about over the years and issue a central bank digital currency that acts more like a public blockchain, like a Bitcoin. Ain't going to happen, doesn't exist. Those trends will never happen. It will be a completely censored, a completely controlled, and maybe algorithmic and eventually artificial intelligence supply that will always increase and follow the model, because they don't want you to save. The fiat money system is designed for you to go deeper and deeper into debt, and it's all designed for that. So they don't want you to save. Can we stop pretending we're trying to pay off debt? Can we stop pretending that they want you to save? Your interest is not the macro interest under a fiat-based monetary system, which is, in fact, and this is going to be the last question then, the world's largest regulated Ponzi scheme, as I've always called it. So let's take the last question, and then we'll move to the close. And if you've enjoyed this, just while we take that last question, please give it a like, please give it a share, share it there. I don't like having to ask that for you, but it's working. We've gone from 6,000 to 60,000. I think there's 1 million people that need this information, and we're not going to get there unless you support us. So please do that for me. do like, please do share and help us grow this community. There's a lot of people that are going to get hurt. We want to make sure that people are on the right side of these trends. And as I said, you can get that free book as a thank you. And that 4-part video series will be there and available for you if you haven't watched it already. retirementplanb.com/book. Final question, Aman. What do we got?
Okay, I think we've answered most of the questions. Everybody's saying thank you for covering all of the important aspects. A lot of people have asked some questions on your thoughts about the current price cycle or the bull run, which people are calling for the crypto market. What do you think 2021 is going to look like?
Okay, well, let's end there then. So you're asking me for some price forecasts. The last time I gave a price forecast was around halving, where I said that the market is a non-event during halving, and you get all the new people that think that they're onto something, and then you get a big correction as it becomes a non-event, and then you enter into a bull cycle. From my perspective, I'm not a short-term trader. I don't do short-term price forecasts, but again, what I've covered here, I think we are in a 12-year bull market. I think that we get corrections. I think Bitcoin went up too fast, and it's a bit for us to control Bitcoin. I like to see a bit more steady, but I love these corrections so that people get more opportunities to accumulate. The irony is that they use that to listen to the fear, uncertainty, and doubt from Craig Wright, from Tether, from XRP, from government bans, from Janet Yellen, and from everything that makes them end up buying at all-time highs, selling at all-time lows, and then ending up with no Bitcoin in the long term. So please make sure you get yourself on the right side of that and don't fall for it, because this is all market manipulation. And if you want to be a trader, then the challenges with trading is you create lots of taxable events, and governments certainly want your tax. Your forms are all going to contain new tick boxes where you have to declare and declare all your cryptocurrencies. The more you trade, the more governments can collect from that. And so that's the investors, they don't have the same things. And so that's my advice. Don't trade. So I'm going to close this off right now. It was great to be back. As always, we're here each and every week. I think a suggestion that we had for next week was the whole impact of all these companies buying Bitcoin. We were meant to cover it last year. We never got round to it. So if you'd like that topic, do let me know in the comments section. And if you've got a suggestion for what you'd like us to cover as the main topic next week, there's a couple of things you can do. Add a comment below and tell me in the live chat. And also tweet me at Simon Dixon Twit. That's at Simon Dixon, DIXON TWITT. And let me know exactly what you'd see, and we'll see if we can deliver that for you next week on the YouTube channel. So always remember, you are alive at one of the most interesting times in financial history. It's been really painful for some. It's been great for others. And I want to make sure that you're on the right side of these change. And I'll keep creating content and cover your topics to make sure you're on the right side of that change. Peace. See you next week.